Hi guys, it's Nathan Watt here from Watson and Watt. Today I'm just going to run through some basics of understanding financial statements for small business. One of the things I see a lot when dealing with small business is that they have no handle on their financials or their accounting records. And today I just wanted to go through some basics of how to find some amounts in your software package so you can understand what's going on in your business and how to make some better informed decisions regarding your cash flow and investments and things like that. So today we're going to focus on the balance sheet. In a later video, I'll be doing the profit and loss statement, but today is just the balance sheet. And by the end of this session today, you're going to understand how much you owe to the tax office at any point in time, how much you owe your suppliers at any point in time, how much you're owed from your customers at any point in time, and of the cash that you've received, where has it gone? Probably the biggest question we get is, where's the cash? So today I'll cover that. And you'll notice that today I'm using a program called Xero. It's a browser-based accounting package. It's cost-effective. I recommend it for most businesses I deal with. It's easy to understand and it takes the accounting out of accounting, basically. So hop on, have a look at that if you want to. Today we're in the demo company, just having a play around. So let's get into it. Balance sheet basics. So where do we even find the balance sheet in an accounting package? These menu items will be different depending on what package you use, but essentially they all do the same thing. So today we're heading up into reports. These are your favorites down here, but we'll head into all reports. And over here in financial, we have the balance sheet. So the ones with the stars on it just mean they're favorited, so they come up in that drop-down menu. Click on the balance sheet. And it'll bring up a fairly familiar looking report. Important things at the top are the date periods that you're looking at. Today we're looking at May 2018, so that's the 31st of May. If you wanted to run it for different periods, you can, and you've got different options up the top. Before we jump into the actual details of it, I suppose it's important for you guys to understand a little bit of the accounting theory that drives these financial statements. And the most basic form are the different types of accounts we have in accounting. So there's 5 different types of accounts, and they'll be very familiar to you, being assets, liabilities, equity, revenue, and expenses. So the assets, liabilities, and equity all exist on the balance sheet, and revenue and expenses only exist on the profit and loss statement. That's the only way it can ever be. If you've got assets in your profit and loss statement, you're doing it wrong. So reverse those out and put them on your balance sheet. So the assets, as you would know, are the amounts that you own or amounts that are owed to you. And your liabilities are amounts that you owe to somebody else, and the equity is basically the leftover amount. So if you think about your house, you've got a house worth $1 million, that's an asset to you. You've got a mortgage to the bank of $500,000, which means you've got $500,000 in equity. So it's exactly the same for a business, except that we have a whole bunch of different accounts in assets and liabilities to get to the equity figure. So within the assets and the liabilities, we also have 2 different types based on their duration. So we have short-term assets and short-term liabilities, and short-term or long-term assets and long-term liabilities. So you'll hear the terms current and non-current thrown around, and basically that just means current assets or current liabilities are things that you have to pay or be paid within 12 months, and non-current are anything over 12 months. So if you've got a credit card that's due in 30 days, that's a current liability. If you've got a mortgage that's due in 30 years, that's a long-term non-current liability. Now that's important to understand your cash flow and understanding what's coming up on your financials. So if we jump into this demo company, we can see here, starting at the top, the assets are always at the top. The bank account's usually right at the top of the lines there. We've got 2 bank accounts. This one's in overdraft by $9,000. This one's in positive by nearly $7,000. So all up, they have an overdraft of $2,200. They then have accounts receivable. So this is also known as trade debtors, and it's basically the amounts that your customers owe you. So you've sent an invoice out for work you've done, but they haven't yet paid it. That's what those amounts are. And they're all current assets. So the next ones down are just your fixed assets. So any plant and equipment or inventory or anything like that you've got, that'll all be under fixed assets. We won't go into those today. And liabilities, again, accounts payable are the amounts that you owe to suppliers. So you bought some goods on credit, they sent you an invoice, but you yet to pay for it. GST is obviously goods and services tax owed to the ATO, and PAYG withholding is the amount on your employees' wages. Other things you would see here are superannuation, credit cards, anything that's due within 12 months, basically. So why is it important for us to split up the non-current and the current? It's basically coming down to what can you afford to pay, or how much working capital have you got? Now this one's not a great example, so I'll jump into a company that you'll have all heard of. So this is Tesla on NASDAQ. This is their balance sheet. If you look up in their balance sheet in December 2017, we're talking in hundreds of thousands here, so that's actually 3.5 billion in cash. So all up, they have 3.5 billion in cash. They have 2 billion in inventory, so cars they're sitting at on their production floor. Some other assets, they've got 6.5 billion in current assets. Now that sounds like a lot of money, and it is. But when we look down at current liabilities, we'll see the accounts payable, other current liabilities, and some short-term debt equals 7.6 billion. So we're in a bit of trouble because they've only got 6.5 billion coming in the next 12 months, but they've got to pay out 7.6 billion. So where are they going to find the other 1.1? Another example, another well-known example is Apple. Very different story. Bigger numbers again. They've got $20 billion sitting in their bank accounts, and they've got a total of $128 billion in short-term assets, in current assets, and they have $100 billion in current liabilities. So they've got an excess there of $28 billion. Now that's good. They can afford to pay their short-term debt with their short-term assets, and that's what you want it to be. So if we draw that down to the small business, what does that mean for you guys? So in your bank account up here, these guys are in overdraft, $2,000, and they've got some customers who haven't paid them yet of 16, so they've got about $14,000 in current assets. So if we look down into the current liabilities, total there is 19,000. So they're going to be short $5,000 on their current liabilities that they need to find from either long-term debt, injections of capital, or selling more goods and services very quickly. So of those current liabilities, we'll just run through how much do you owe the tax office and when. So down here in the GST section, they owe $1,500. If they had any income tax debts or amounts owed there from last year, that would also be in here. So you'd have income tax payable, and that would be an amount sitting down the bottom here. PAYG withholdings, again, that's paid monthly or quarterly to the ATO, depending on your cycle. And superannuation would also sit down there. So if you add up GST, PAYG withholding, and your income tax provision, they're all the amounts that you would owe to the ATO. Now, these amounts will change as you update your file. So as you process a sale or you buy more goods, these amounts will change with the GST and the tax implications on those. So every time you run a payroll or a pay run, this amount's going to change, it's going to increase. And likewise, every time you pay the ATO, these amounts will come down, reflecting the current amount that you actually owe them. So suppliers, how much do you owe your suppliers and who do you owe it to? So the accounts payable here, also sometimes called trade creditors, total amount there of 8,507. Now you can click on these amounts, and Xero is great because it's a browser-based software, so you can open a new tab if you wanted to, and we'll just open that up. Now this is going to show you the underlying general ledger transactions, which isn't overly helpful when you're trying to work out who owes you what money. So if we actually go back into our report section, and you'll see here age payables, that's the one for your suppliers, so that's how much do you owe people. So we're in May 2018 again, and we can run down the list here saying, well, we owe PC Complete $2,166, and that's all in May. So we incurred that expense in May. Smart Agency, however, we incurred $2,000 in April, and we had another $500 in $2,500 in May. So all up, we owe them $4,500. We can actually drill down into the amounts, and you can see which invoices they are. And again, you can click through to the actual underlying transaction. And if you've been very good at your record keeping, you'd also have up here the attached PDF invoice of that actual expense. So you can actually go through there and work out who you have paid and haven't paid, how much and what it's for, if you can't remember. But these amounts here, you should really be running these at least weekly, but most certainly as part of your month-end process, you should be printing this off or PDFing this as part of your month-end package to say, yes, these are all the amounts that we owe, and making sure that nothing's been coded to the wrong account, or you've paid the wrong person, and that all these amounts are correct. So likewise, we'll turn to the trade receivables. So your trade debtors, this is how much customers owe you. A very similar report, except it's the other way around. Receivables, as in we are owed these amounts. Ridgeway University, Pinnacle Management, same process. You can click through into each one and find out exactly which invoice it's for and how long it's been overdue, and you can pick up the phone and chase them up for payment. If we go back to the balance sheet now, other liabilities you would see down here, if you had some non-current liabilities, would be your mortgage or loans, any chattel mortgages for equipment, anything like that would also come through here as the bulk amount. And equity I won't really touch on, but basically this is the accumulation of all prior years trading and up to whatever date you're running this report is up to. So over the whole lifetime of this company, they've made $2,909. So this last one will be very important for a lot of you. Again, it's in all reports, and this one is going to show you where the cash went. It's a common question we get in the accounting world is, you say I made a profit, but there's no cash. That profit amount isn't in my bank. Where did it go? And sometimes it's a convoluted answer, and sometimes it's quite easy. But this report here, the cash summary report, is invaluable for you guys actually. So it should be something you'll be looking at weekly, and again at absolutely minimum monthly, to see where the money's gone to. So again, we're in May. We're looking at just 1 month. Now this report has a different option here where you can compare it to your average month to see if you had more or less income, more or less cash than an average, or you can change it to the previous month. Or if you wanted to look at, the year to date sort of thing, you would just choose that down to the last 12 months. How much cash did we receive and spend? And previous one period would also be 12 months. Now, this doesn't look like this demo company is traded, so there's no data there. So I'll just go back to 1 month. And then we've got some data. And I'll also tick this box up here to include GST. And I do that because it makes more sense for business owners, because they don't think in terms of GST and non-GST amounts. They think of, well, I got this amount into my bank account, where did it go? Even though usually 1/11 of that would go to the ATO as your GST payment. So if you include the GST there, it'll actually take the total amount that went into your bank account and make it a lot easier for you to reconcile it in your own mind. So in this month of May 2018, there was $8,292 came into the bank account in the form of interest from the bank and some sales. Now, of that during that same month, I should say, we spent $300 on bank fees. We paid $53.90 in accounting. Geez, that's cheap. Some legal expenses of $4,500, etc., 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 all the way down. And this is basically just some accounting language there, so don't worry too much about that. This is your assets. So non-operating movements would be your assets and your liabilities. So this is basically your profit and loss, and this is basically your balance sheet. But it doesn't really matter for your cash purposes, because you're saying, where did the cash go? looks like here this company spent $6,930 on some office equipment, meaning that your negative cash for that month, or this company's month, is $11,799. So that's the $8,292 came in, but we spent $13,000 in operating expenses plus another $6,930 in office equipment. So we spent $11,799 more than we received. Now, if you look at the bank account, the opening balance here, we started with $9,596 in the bank account. We spent $11,799, meaning we've got an overdraft now of $2,203. And that's it. That's where all the cash has gone throughout the whole of the month. And it's a good little summary for you guys to get your mind around where did it actually go to. You know, as a business gets bigger and there's more data in here, you would have things like GST payments and loan payments and all that sort of stuff as well that will actually explain where the cash came to and went to. So that's it for today's session. I hope it's helped you understand the power of using your financial statements to make decisions in your business. And yeah, that's it from me. I'll catch you guys later.